Hi there folks, welcome back to the EdgebyRS Academy. I hope all you guys are enjoying your long weekend and had a good past week. Based on the votes received on Twitter, I will be covering the session of Wednesday 22nd May. Now before I get started, new viewers to my channel may wonder why I do record these clips. The reasons are very simple. One, to show you where we executed our trades on the day. Number two, to help you understand why we took the trade. Because when you understand the why, at some point in the future when the similar pattern or trade setup develops, that is when you will be more confident to execute yourself irrespective of the level NQ is trading at. Number three is also to teach you, educate you, if there was any other trade warranted instead of the one that I executed. So in the case of Wednesday, we took two trades, which is short during RTH, early RTH, and then a long later in the day. So I'm going to be walking you both those trades, and if there was anything on the opposite side, if so, did it hold any merit or not? Now, the next bit is usually, I tend to trade ES more often. However, on Wednesday, the opportunity was compelling enough where I dipped my toes into NQ instead. So, without further ado, let's get to this chart. First and foremost, I'll walk you through the structure, just general structure, which will be important to you today and even, which will be important for the kind of trade we took and even for the week ahead. This is the balance that I have been tracking, the anchor balance 18,123, 18,692. This is the balance I've been tracking. You guys can see my plans on Substack, NQ weekly plan. Again, there's a short review of how the prior week played out, weekly plan for the week ahead, and the zones. Of course, this plan is for the week of 20th May. So if I just quickly open up this chart right here, well-defined zones, well-labeled, you exactly know what to anticipate. These are not zones where you want to see PA as such, price action. These zones are more like you exactly know what you're looking for and you will simply await MGI context to confirm your execution. Literally, that's what it is. So when the week started, we already knew 18,832 and 18,888 were the two specific levels within this 50-point range that we were watching for initial resistance. So we were not looking for support here. We were not looking to bank any profits here. We were simply looking for resistance, which means a potential short for which we just needed the current context and MGI to guide us. So before I get on to this quick structural review, so this is the anchor balance, something that's been part of the plan since a very long time. And right here, we had a breakout, a potential breakout of balance post CPI on Wednesday 15th. Lack of traction, came back inside and defended the top of the CPI release candle. Now that is a weak pullback or rejection of the anchor balance top. So if sellers were serious at the top of the balance, we would have definitely seen something more stronger. But look what happens thereafter, another higher low and the ultimate breakout. So top of the balance, yes, as per balance rules, we are observing for resistance. But again, we want to understand what is the tempo of rejection. We need to understand the magnitude of rejection. We also need to understand, is this rejection a mere repair of the structure? So in this case, we repaired the single prints here and then continued to move higher. So even a pullback needs to be understood as to why. So again, just these small insights to help you understand the kind of thought process we possess in Discord, and that's how I guide my members every single day. So we had an amazing, a textbook breakout candle Opening drive higher, broke out of balance, fantastic. Had a minor pullback, could have joined, but again, not my zone on the day. However, we had a zone very well marked at 669, 692, and precisely where the list framework that I have shared with my members, the simple 4 steps, confirmed acceptance of the balance breakout. So this was your first long on Tuesday, and now look on Wednesday what happens. Another long opportunity, and the textbook list long was present. So we took the trade here, of course, a few points late. I was a few points late, but held it literally ahead of the event and secured good 250 points. So the idea was very simple. Ahead of the event, markets are unlikely to break out or break down. Now, this is essentially, in other words, consolidation, something which everybody knows. But when you have the key levels with you, you exactly know which end of the consolidation marks the bottom, a potential bottom, or the top. In this case, we knew the anchor balance is important, right? There's nothing more important than the anchor balance. Anchor balance supersedes everything. So we had a textbook list framework here. We took our chances, we took our long, and thereafter with a defined risk. Of course, the Nvidia earnings truly helped us, but we were very clear that this is support. This is where buyers keep control above. So we exactly know being above this levels means what? It means buy and control. So if buyers were indeed going to give up control, we wanted to see them below this level ahead of the earnings, but that did not happen. They were holding, and that gave us the confidence to explore and stay long. Again, our stop losses are pretty standard at 30-35 points. Again, each to their own. Some traders reduced their stop loss. So this was our reason to explore a long. Now right here, we couldn't have explored a short. Again, you do not short into the balance top from above. That's A. You do not short into the buyer control zone standard. So these were just basics, which meant there was no alternative trade here apart from going long here, unless there was a breakdown and a list confirmation, which is multiple 15-30 minute candle closes below, telling us to explore the other side of the trade. However, let's move on to what we did at the open on Wednesday. That is, we shorted 18,832, which was the prior inside week extension. We knew this was resistance, and is why we shorted right here. And this is a trade that I even called out live on Discord. Now, the reason is very simple, guys. Ahead of event, NQ is already on a value gap up, which is above prior day's value area high. That means initiative buyers. Number 2, right at the open, we even defended the spike base. So we had 2 reasons to be bullish, and absolutely so. So any trader could have been long off the open, which is 18,808 on the day, if I'm not mistaken. Just a second, let me have a look. Right, 18,808 was the open. So we held the spike top and subsequent spike base on any pullback. We were holding the open, all of which implied bullish. It was a long as per the textbook, not denying that. But the thought that we had is, why would we go long into a pre-identified resistance? Instead, we will look to short. That's the first thought we had in mind. Second thought, why is the market gapping higher, even value gapping higher, that is, ahead of the event? The event typically is unknown, and if it is an unknown, you want to think that are market participants truly going to buy something at unfair prices, right? In this case, a higher unfair price. No. So those are the 2 sets that allowed us to explore a short instead of a long, even though spike rules and being above value suggested initiative buyers. Despite that, we said, nope, that's not the approach we take. We're not buying at unfair prices ahead of an event. Instead, we will look at the resistance which was already identified, pre-identified resistance. We'll back that resistance and go for a retest of the value area high, and if there's traction, of course, runners down to the balance top. Precisely how it develops. So I want you guys to take away something very important from here. Yes, we have those spike rules, balance rules, gap rules. Yes, they do exist. But at some point, you want to take a step back and ask yourself, what's the preceding structure? Why is the market here ahead of an event? What does it mean? Are we bound to break out ahead of the event, or will we wait for the event to break out? Now come on, if you look back, 8 out of 10 times, breakouts or breakdowns happen post-event. 8 out of 10 times. Nothing that we do is 10 on 10, right? So our goal as traders is to do the 8 on 10. The 2 failures will take care of themselves. That is not my concern. My concern is the 8 on 10. So the 8 on 10 tells me we're not breaking out ahead of the event, which means I want to short. So with that idea in mind, we shorted here, and by default applying balance rules, list framework, as well as having the understanding no breakdown either ahead of the event, meant that we could explore both ends comfortably. And again, it was a weekly plan that guided. So guys, personally, I've seen a lot of traders who spend hours preparing a plan, and once the plan is there, at the time of execution they fumbled. Just ask yourself, right? Take a step back, ask yourself, have you spent those hours just to draw random lines? Or are they way more meaningful than that? For me personally, if I'm spending hours on any trade plan, you bet I am going to execute. The only time I will ever question my plan if MGI truly suggests something extraordinarily different happening. If that doesn't happen, 90% I don't deviate from my plan. And that is what you guys want to learn. If there's a plan, you want to follow the plan because you made that plan for a reason. And if developing MGI makes you think otherwise every single time, then you know your planning can get much better. For me, I prepare the plan, I spend the hours, that is, and then I'm going to execute the plan, because if I don't, where can I get the return on my time invested? This is one concept you guys want to remember, ROTI, return on time invested. And when I plan, I'm investing time. The return on that time is simply going to be, if I pull the trigger, I follow the framework, and I let the plan do its work. Again, our goal is always to use MGI and context to confirm. Like I said, we had both of those present on Wednesday, and is why I took the short here and subsequently the long as well. And thereafter you have those minor notes to just review and learn. So again guys, when you trade, I'll leave you with this. You want to capture from my videos how I think, the elements I take into consideration. You want to see how I'm viewing the structure, and more importantly, if you guys want, you can always join my Discord to get real-time updates, or else my weekly plans are there on Substack. And trust me, these plans are not something which are just out there. These are actionable plans. There are no ifs and buts to this. This is defined by the list framework, confirmed by MGI. Context, of course, you have to look at those. And these are your zones of engagement. Defined resistance, red resistance, blue buyer control, which means any pullback you see, you want to be long. That is what it means. And any failure below and weakness begins below this gray zone. Of course, this was for the past week, and I will be out with this week's plan shortly, probably by end of day. And of course, if you're interested, you can have a read as well. So I hope this was helpful and you had some notes to take away. Again, if you guys are watching this and you have any questions, send me an email if you like, direct message on Twitter, on Discord, wherever you are, on Substack, even if and I will get back to you. And of course, I would really appreciate if you guys drop in your comments. And if you have any other questions or any particular topic you would like me to cover the next time around, I will look to cover that. You guys have a good, profitable week ahead, and see you next week.